What's up, everybody? There are never too many kings in the chat. Everyone is a king at 21st Century Renaissance. What's up, MTD? What's up, Maxi King? No. Crown emoji. The one true king of Westeros. He died for our cause. I like that clip of there's like a little girl or something, and it's like mom's like, what are we celebrating today? And the little girl's like, Martin Luther King. And the mom's like, so what did Martin Luther King do? And the girl goes, he died for our sins. What's up, J Card? Sounded like who's the there's some character on Rick and Morty who sounds like that. Ooh, it's not Mr. Poopy Butthole. It's a different character, but it's voiced by the same guy. It's voiced by Justin Rowland. Ooh, you have something, Ray. Should people be moving their shares out of Fidelity? I have no idea. I have no idea. I mean, I posted that thing today. I mean, what? We can go over to mine. My profile here. I had some fun tweets today. I enjoyed my own tweets. I post a lot of them for me. Where is it? Oh yeah, like this one. No, I mean, I wasn't like highlighting this because I wanted to like tell people to get their stuff out of Fidelity. I have no idea. But What Can IMT does bring up a good point, in that if you do go to exercise, if you go to exercise your shares, or excuse me, you go to exercise your warrants with your broker, you don't necessarily know that the money is going to go to the company, because like you could exercise the warrant, but that, like, if you hold your shares in a brokerage, Schwab, Fidelity, E-Trade, whatever, it's the same sort of principle that goes along with the shares themselves, in the sense that you don't actually hold those instruments in your name. Your broker holds them in custody for you and has certain rights and privileges and elections that they can make with respect to those instruments. So if you go into your brokerage platform and go exercise, or you call up and you're like, I would like to exercise my warrants, they'll go, okay, and that can mean exercise. But if you go to them and you're like, I would like to make sure that the money that I give in order to exercise this contract goes directly to the goes directly to the company. How are you going to actually check up on them and make sure the company got it right? Like, do you have a warrant registration number? Are you going to call up will Fidelity give you your warrant registration number, and then you can check with the company and be like, hello, did you get the warrant registration number? Like, did you get the money for this number? It's something like that. So if you do have the warrants registered in, I guess, right, if you have them in ComputerShare, and this is not necessarily me telling you to go put them in ComputerShare or something like that. but because ComputerShare is the GameStop registered transfer agent, that they will do that, right? They will do that. So there'll be probably a premium. You'll have to pay a fee for ComputerShare to exercise the warrants for you. But when you exercise them, like their end of the transaction is getting covered by the fee. If you just go through your brokerage and you say, "Hello, I'd like to exercise, please. 1 cup of exercising, thank you." You will potentially just give money over to the broker. The brokerage will hold on to your money, right? They'll like take the warrant out of your account, and then they'll go get a phantom share of GameStop, and then they'll give you that, right? They'll do that, and then they'll just like pocket the difference and just hold on to the cash. Put that into I don't know, even just hold the cash, collect SOFR on it, and then in a year's time, when the warrants expire, then they will just hand them, right? They'll hand them over or something to the company. They'll exercise them officially because they're the ones that actually hold them, and they'll pocket money off of the difference between a share in the market and the exercise of the warrant. Something like that. They could do that, and we wouldn't be any the wiser. Like this. He died for our sins. You. No. What do they do? What is you? Energy fuels? They went down a lot before they went up, though, dude. It went down for a good 4 months before it started moving up. I mean, it's been moving up, but so I don't know about you. Ooh. Oh, interesting. Force closed in the money GME 1 calls today at 250. Yeah, lots of weird stuff is going to be happening with this. The warrants really messed stuff up. But that's kind of the idea, right? Make this thing a headache so that people stop messing with it. That, I think, is the plan. The play. Something of the sort. What's going on with some of these? Yeah, I mean, liquidity is just so bad. I was looking at Beyond because they're dying. They started to add weeklies back in. But yeah, let's even look at these. Yeah, so bad. The spreads just never became good on these. Volumes are apparently at the 24 strike on the put side. There was volume of 1,400 contracts traded today. Were those exercised? Hard to say. The numbers did come down, so I guess some people did close them or roll them, but yeah. Chris says, what I find most interesting about Bond Finder Lady Gobble Indicator is that upwards move does not typically occur until the main and gobble lines reconvene after triggering. Yeah, let's take a look at that. I was looking at PMO for a little bit earlier. Let's get Ultimator, Bond Finder here. Ooh, it went even higher. Guys, it's still going up. Still going up. Bottom line is super high now. Why is the bottom line so high? When was the last time we saw the bottom? Yeah, the bottom line, last time it was this high was also back in January of 22. So we're still waiting. Oh, excuse me. If institutions exercise, they would also give money directly to GameStop. That's right. Yeah. Well, let's see. Let's take a look, Chris. All right. The separation suggests we're not ready to move back to the upside. Not immediately. How do these? Let's see. Some of these are so small. When does this close? We zoom in here. When do we get the gap closing? So if we zoom in here back to January 23, what does this actually look like on the day-to-day? So it's going up. We move into the red zone. It's flashing for 1, 2, 3, 4, 5, 6, 7 days. And on each of those 7 days, we move down. Both lines are moving up. And then next day, whoop, from Friday, January 6th, which is an options expiry, into Monday. Monday's a red day. Then we're down, and then we start moving up for a straight week. And it's very green for a straight week. And then we top out, right? Kind of double top a little bit, go up to like 23. Actually, that's very interesting. This first kind of thrust here on this uptrend, what was the high? 2215. It was a little bit below where we are, but we kind of topped out kind of in that range. That's very interesting. Up to 2488. Interesting. Nice 60-ish% move. Not bad. Not bad. Not great. Not bad. I said to the stock, I said to him, a 60% move. I've seen bigger moves. Not good, not great. That's what they're saying. Oh, weird. Fidelity's weird with expiry. They do what they want. Oh, hey, Mark. Are we going to go over 25 on Cat Day? I don't know about on Cat Day. Post. I mean, I think we kind of start moving post. Wow, guys. The Jerome Powell is in our live stream. Federal Reserve Chair Jerome Powell. Welcome to our live stream. Do you have any plans do you want to tell us, like, are you Are you going to do what if you do a rate cut? Could we get you to do a rate cut early? Could you do it just for us? Interesting. It's almost 3 weeks after the signal on the ultimators bottom finder came down and settled in May 24. We got upward movement. Let's take a look. 24 was weird because I don't think that was necessarily like I mean, I guess it's probably swap related. Let's see though. We started moving right away, just not fast. The day after we bottomed, we went from 10.05 to high of 10.94, close of 93. So we had a 7% day. We had a 7.5% day the day after it happened. It looks small because it's not 74 and then 60%. But it did move right away. And then it cooled off a little bit. So we moved up maybe a total of like 20%. And then we cooled off for a couple days, but didn't give back the full amount. And then beginning of May, then we started to really move. So May 2nd, 16% move, then a 29% move, 97.97%, 0%, loss of 2%, then a 13% day, loss of 3%, and then 74, and then 60, and yeah, not including the highs. So it did start moving. It's just that in comparison, we're like, it only moved 10%. Looks bad, right? It only moved 7.5%. Whereas like nowadays, what are we used to doing now? We don't have, GameStop doesn't have 7% days very often anymore. When was the last time we had a 7% day? We lost 6.5 Friday before warrant issuance, the ex-dividend date. So we have big moves down, but yeah, this whole cycle we didn't have a single day that had more than like a 4% gain. 4.5% gain was our biggest day. Yeah. We had a 4.5% day early September pre-earnings. 4% day. Yeah, we don't have big green days here. We had a loss of 22 convertible bond offering. 2.5. Yeah, so probably, yeah, Bitcoin front run. We had 6%. Prior to that, 7. Prior to that, 10. So that was our biggest move since, we had a couple big days back in early April too, coming out of the hole here. So I mean, they're there, but it looks a lot weaker. It looks like we just kind of went sideways. But before like this whole thing, let me zoom way in. You can see it here, right? On the left side of it, it's like, oh, all right, that's not nothing. And then this stuff looks like, whoa, before we get the mega bar. Then the mega bar makes it look dumb. Right? But right to here, like impressive compared to all this. That's good enough for like most of a cycle in its own right. From 10 to 20, that's 100% move in a week, 2 weeks after getting, and a little cool off here, but besides that, that's a nice something there. So it's usually within a couple days, I think, right? We get the flash when they come together and then come down. So, but you're right, we don't have that yet, right? If we go back to, let's go back to last fall. What did this look like? Up, 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 up. Gobble doing her thing, still going up, not closing. And then the day after we slap shut, Friday the 25th. And then the next day, Monday, then we start moving up. So there's usually like a day. We get the smack shut and then it moves, right? Up, 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 up. This one, it happened same day. But we had that kind of secondary move there. So this one got really wide, but didn't set off. I remember this one didn't set off the flash, but it did when they smacked back together. We started to move up. So when they come together, that's kind of the signal, right? Flash, not too much. Stays pretty far apart. Flash. This one was better on the lower time frames. I remember. This one didn't flash. We still moved up though. And then this. So this is pretty big. How many days we get in the flash here? 1, 2, 3, 4, 5, 6, 7, 8, 9. We're getting signaled for 9 days here. When's the last time we had 9? Not there. That's got to be. That many days has to be back in 23. Yeah, 24, no. March one was decent, right? 1, 2, 3, 4, 5. No, just 4. January 1 was 1, 2, 3, 4, 5, 6, 7, 8. Yeah, so this is the longest one. This is longer than even that January one because now we've had 9 trading days with this going off. That's quite something, right? And it's just been 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, right? 11 trading days of pretty much feeling like we just keep going down. Honestly, looking like what we were doing going into the last time this guy went off, right? Just down, down, down. Like red days move us redder. Green days don't take back as much as they gave up the previous day. And that's what culminated here. And then big move back to the upside. Not all the way though. Top of this candle. So we'll see. We'll see. Fish Head Curry, what's good, dog? It's a good name, Fish Head Curry. Oh boy. Yeah, man. Good luck. Good luck getting out of those. I mean, they're 2022 calls, so they'll be in the money, I guess. You can exercise them for warrants too, so that shouldn't be as bad as exercising the warrants themselves, though. So you should be able to call your broker and if you want to exercise for those. I don't know how much cash you'll have, whether you can exercise those, but that should be a little bit less complicated than asking them to exercise the warrants. Big peak, yeah. So it took some time. Yeah, there was movement 10 days before, but big peak was you came within 2 days after coming together. But it is important to point out that gotta wait for them to come back together. MCD is projecting 25.5. Are we ripping now? Something happened? No. Yeah. So that's the thing. It's like when we get this, it's like wait until they come back together, and when they come back together, that's the opportunity. Yeah, Fed Chair Jerome Powell. Can we get some autographs for everybody? Can we get that? Can we do that? I mean, since you're in the chat room, you know. Yeah, I'm not so sure we would rip to $80, but because that was it. I'm pretty sure what Roaring Kitty was able to do is he was able to basically exploit a situation, right? Where this move was coming in, and blew things into the stratosphere back up above $20. But I'm pretty sure options wise, I'm pretty sure options crew, options market makers were expecting that we could run to 20, but that we wouldn't go above 20. That's what they were expecting. And I think that's why they happily sold him. That's why they happily sold Roaring Kitty so many $20 calls, because they're like, we're not going to let it go above 20, so it doesn't matter. And then, oops. Because then he wildcarded, which was to get the algorithms to price up the stock by tweeting. All right, let's see. Guido says, hey, Doc, I hate to admit it, but I never really understood the mechanics of the GME bondholders. I missed those videos where Newton explained them. Yeah, I mean, the basics of it, we did talk about it a bit here too. But it was like, I also never got a 100% clear picture. I remember trying to talk to different people, and I for the life of me, I couldn't figure out, because I like, okay, I would understand the math of the hedging, and I would understand the math of like, okay, here's how this cancels this and this works with this. Okay, you've got the bond, it's working like a call option. You're hedging it the way you would something else, but okay, like you would an option in a certain way. But then I couldn't figure out, because like I remember what's his face? Han Akamatsu, like talking about this, saying they were scalping and stuff, and it's like, okay, cool, but like how? Like how does that actually work? Like what is the desk? Like how did they come in and scalp the bonds? I'm not saying they don't do it, but I don't know what the platform looks like. Like, do they make a phone call? Like what is it? What happens? I even asked I even asked a friend in I guess he's in is it private equity? No, maybe it is. I forget, but I talked to him and I even asked him and I was like, how's this work? And he was like, well, I remember this is basically what they talk about in fixed income securities, but I actually do not know how bond desks trade this stuff. I was like, okay, well, that makes two of us. So I never figured out the practicalities of the trade, because that's the thing it ultimately comes down to. It's like, okay, you have theoretical models, you have theories, you have this, you have that, but ultimately it's like, what does the actual trading apparatus look like? How are trades made? How is that facilitated? How quickly can you make that trade? What is that? Who are your partners? Who is making the trades with each other? Bond desk. Which bond desks? Why do they think this is profitable? Right? That's are they just gaming each other because they can't game retail? That's the thing about options. It's a little easier. It's like, okay, well, you understand there's all this research out there about retail psychology, buying patterns, how they engage with zero DT options, all this stuff. So the options market is way easier to forecast because you know who the options market is taking advantage of. There's research out there that's telling you, well, here's who's routinely trading this at a disadvantage and doesn't know what they're doing. And so here's how options market makers are profiting off of that. Very clear how that works. What does the interface look like? We use the interface every day, right? We use our trading platforms in order to figure out how that works. We use it to trade, so we know, like, we can engage with the platform, be like, oh, okay, this is how people use this. Here's how they don't use this. This is how they think about this, right? So we understand this. The bond stuff, it's very difficult for me to actually understand the practicalities of that because I don't know. I can't see like into the world of the bond trader and what they're doing. But people are trading bonds. I see the trades happen. So I also do not know the fullest extent of exactly what's going on with the bonds. My hypothesis was something like they work like call options in that there is a lot of gamma at the conversion price. Long gamma, what that means is the amount of hedging that's going to take place with respect, that is buying or shorting, I guess. The amount of shorting per movement, per dollar movement in the underlying is going to peak up around the bond like sticker prices or something like that, the face value, because that's the strike price, but that would be the conversion. Well, is it the conversion price? Either the conversion price or the quote unquote, I gotta get my camera. There we go. Face value price. I guess it would be the conversion price. Excuse me. Because the conversion price is like the strike. But the conversion, no. It's the actual price. It's like $29.85 and then 28, 30 or whatever. Yeah, because this run topped out. This run topped out essentially in the pre-market. So let's go to the 4-hour chart. This run topped out at essentially the face value price, 28.30. Yeah, at the face value price of the second convertible bonds. Right around here. That's where we topped out. This, because you can see this was pure front running because of the Bitcoin announcement. Nothing in the swap stuff. This had nothing to do with swaps. This was totally out of left field. This move was inorganic. This move was front run. This was front running the Bitcoin conference. This horn, right? Nothing showing up down here. And otherwise, where did this tap out? This tapped out, right? Our ceiling prior to doing that front run move, 29.50-ish, right? Our high, 29.39 intraday. Yeah. So essentially just below the price of the first convertible bonds. That's where we hung out, which is what we thought, right? We thought that the price of the convertible bonds right up here would act like a ceiling on the price. Right. So first one, put this lid on here. They front ran the Bitcoin thing. We came right back down, hung out in here. Traded a little bit up and then came back down. But basically this whole time hung out on this line. Then down, came down here, touched the cash floor a bunch of times. Earnings related, and then here, the top of our run here was second convertible bond price. And then down, touched our cash floor a couple times, 51, 61, so yeah. So this is why, like, when I imagine us going back, they'll need maybe some event to kind of front run stuff to get us over maybe this back over this mark again. Otherwise, we stay under it, I think. 2 cents there. Hey, what's up, Adam? Welcome. Yeah, hey, great to see you in the comments here, man. CC premiums are brutal since warrant issuance. Yeah, man, because they're probably about to run it back up. That's the thing. It's low because liquidity is bad, but options premiums very low, which is likely means, right? That likely tells us, oh, okay, maybe they're gonna start moving it back to the upside, right? When options prices get cheap like this, that's largely what that says, and they are very cheap based on IV. We've got a lot of weeks coming up where IV is under, right? 49, 49, 52, 47, 53, 54, 3, 53, 55, 55, 50, 58, very low. Very low. Schwab Composite IV right now is in the dirt, 52. So we're basically back, I think, to like the bottom of the second convertible bond offering back there. So, I mean, like I said, these days I'm not going, I haven't been leveraging myself for long plays, but by and large, like when I have done it in the past, this is the type of IV environment that puts you at statistically less of a disadvantage than you would otherwise be, right? So you're still holding a disadvantaged instrument, but it's less disadvantaged than it would otherwise be. So the risks are comparatively lower, even if they're not optimal. Yeah, okay, guys, let's go back to the beginning for Tom. That's okay. We'll start over. What do I think happened to the red swap? So I remember back in March, like talking to Richard about this, and the thought there, especially because like I had a bunch of swap data from Metro Ballin. Basically, there was some very large notional value accumulated. Back around like the 28th and the 31st of March, I want to say. And it was right where Richard had placed the Red Star swap. The 28th, I think he had placed it. And I remember being like, oh, there's like a ton of GME notional swap value there. Do we get a deep low? And sure enough, we did. Even after we went up, right? I remember talking about that. I was like, they're going to do the bond stuff, and they just announced the bonds. They're gonna, go take a look at our videos back then too. They just announced the bonds. This is to accommodate. I remember thinking this. I was like, oh, this is to accommodate who's ever got this swap. And Richard's thought was like, okay, do they just close the swap? Right? He talked about that for a while in his videos, right? Did they just close this one? So the thing about the Red Star swap is it is not clear, and Richard always said this was the case, right? Red Star does not necessarily have to be one swap or one set of swaps, but could be multiple swaps that are just spaced apart deliberately, right? Many layers of different swaps maybe that occur, right? Because 6-month swaps are not typical, 1 month, 1 year, 2 year, 5 year, 10 year. They're usually on a yearly basis. They usually don't, at least when I'm looking through, any of this records, and I don't know them super well, but that's not what I see, right? They're usually stuff that's, if it's new, it's usually open for like a year, something like that. I don't typically see 6-month stuff. So, but the stars happen multiple times per year. What does that mean? Well, it's probably that, institutions have kind of spaced out swaps at certain intervals. So, Richard also used to entertain the possibility of, is it 1-year swaps? Is it 2-year swaps? Is it multiple year swaps? I think probably what we're looking at is something like the red star is typically like a bundle of, a bundle of different swaps, or multiple bundles of different swaps layered across multiple years that just happen to be spaced 179 days apart. That's how they're spaced. And whatever needed to be rolled, let's say, back in March or closed was during that red star period. This price action that we're looking at right now, and this is why I'm so interested in looking at 2023, is I suspect that what we're seeing right now, based on these indicators, based on our price action, how this is all looking, right? This looks a lot based on what is going on elsewhere in the market right now. This is in part what I was talking about in my video today. Based on what is going on elsewhere in the market, right? We just so happens, okay, GameStop just so happens to have, this kind of this bottom finder indicator, which is the highest that we've seen since January of 2023. Oh, and by the way, that also happened to be when we were seeing all of these bank failures and bank issues. And oh, by the way, now at the exact same time that this is happening, U.S. regional banks are all getting shorted to heck, and their prices are tanking. So, and gold is going nuts. So what? And rates are being, I guess, rates are being cut or no longer going up. Yeah. Rates are being cut or no longer going up. So I think that's when there was the pivot to holding steady rather than continuing to increase rates. There was like a yield curve inversion thing. So I wonder if what's going on right now is processing of stuff from, 26 months ago. Something like that. 30 months ago, something like that. Plus whatever happened last year, right? Because something else also got processed last year. There was another, bundle of swaps or something that got processed by mid-October last year. And so you'll remember we started to go up into early October. Big options trades. I remember big options trades coming in. I started to get excited. This is when I started entering into the money long calls for that ride up in the fall. And then it went down, right? We went up to like 25 something, and then we went down. All the way back down to the floor, and then went up. Then went up only at the end of the month. So something was going on with respect that had to be moved, but it wasn't nearly as large of a magnitude as this. Although, magnitude-wise, honestly, not that different, because we're back to the floor again. It's just to the cash floor, guys. New cash floor is 2260 or whatever. See this. I'm gonna look at the comments. Oh, here we go. That would be lame. Not sure about your question. How do they still sell GME1? They do, right? They can trade it. They facilitate trading. The spreads are very wide. It's very illiquid, so they collect a pretty decent premium by doing so for people who want to get out of those contracts. Yeah. Yeah, 22s are good because they're I don't see us, like I said, this kind of 2250 area is 2262 or something is like our theoretical cash floor, so shouldn't have to, yeah, I wouldn't be too worried. Hey Beckett, yeah, sure. If you have a way to find that, right, take a look at your version of Richard's model. That was the other thing Richard used to talk, he pitched as an idea too, was like the swaps don't necessarily, depending on the scale, they don't necessarily have to be processed on a specific day, but they may represent like a range. And so there's like, to look at like windows maybe where a particular swap is going to get processed. And the red swap window happens to be one in which very, very deep lows tend to show up, even when it's not expected, right? That's the thing about this particular, the red swap thing is like the red swap somehow leads to a low that's lower than you expect, right? However it gets set up going into there, it's like it always surprises in terms of the depth there. So, yeah, go for it, Beckett. What's up, Bobble Wobble? Hello. Let's see this. Bond places you net positive on the outside. Hedge fund, you generally want to be net neutral. Yeah, they short the underlying. Yeah, the issue there is, again, just trying to understand how they, like, what that actually looks like bound in time and space when they're trying to scalp those bonds, right? If that's what they end up doing. Yeah, they do end up exposed to IV. That's very true, but again, I don't know actually, like, how do they close profit on that extra IV value? How do they do that? What does that look like at the bond desk? Who's buying those bonds from them, having scalped the IV? Front run was also a Babe Ruth moment. Yeah, right. So they can save up stuff that's got to get cleared, and then they can say, okay, we know this. We're going to have this event. We'll dump all this. We'll dump these bags on people who get excited about Bitcoin. Yeah. Very convenient for them. Ooh, excuse me. What do I think will happen with the Fed and BOJ decisions on 1029? The Fed will cut probably 25 basis points. BOJ will probably hold steady, I think. That's what I'm thinking. So they'll buy some GME to hedge. What's up, Kurt? Good to see you, sir. I'm running behind on comments. Ooh, interesting. I saw clips of that, but I didn't see the whole thing. Thomas Petterfy, hey? Yeah. Kurt asked, did I see the CNBC interview with Interactive Broker founder? Yep, Thomas Petterfy. this week mentioning that he doesn't have much GameStop investors as he looked around and seemed to ask people around him. Then he recited the price off the top of his head. Are you suggesting that Thomas Petterfy pretended to be very nonchalant about GameStop, only then to know precisely what the price of the company was off the top of his head? Hey, Simple Rick, I was thinking about you when I was when I saw that Max Payne at $17. I was like, almost time for Simple Rick to YOLO. Richard said, when bondholders hedge, they would be buying billions in shorts, which would give legacy shorts a tempting exit to cut losses. Should close one of the star swaps, red, I think. Yes, yeah. So that would have been the mechanics of how legacy shorts had the opportunity to get out. Model tab, I have separated out the suppressed and unsuppressed prices in this chart. If you shared a link, man, I think YouTube may have not allowed that to be shown. Break it up into chunks, maybe? Otherwise, it might filter it out because it'll think you're spam or something. Do I think volatility has died down on GME and we should expect smaller moves from now on? Ivy certainly seems to reflect that. Smaller moves compared to what? Is the question. I mean, maybe compared to last year? Yeah, maybe. For now. Some of this stuff with the bonds and whatnot and warrants does dampen volatility. That's notably something that happened here. The second convertible bond offering and then the warrants, this stuff has really messed with liquidity very clearly, and that is lending liquidity, and therefore it's kind of messed with. It's messed with GME's implied volatility. Can I zoom more out here? We have this line. We do this. You can do this line thing again. Oh, where did we close? 2307. All right. Yeah, let's zoom out. Oh, this 4 hour. That's why. Do we do? Do we do this? We can draw the lines wherever we want. No. What about this? Or this? Yeah, this doesn't really work. Yeah, I don't know. There's some kind of wedge thing sort of forming, like pennant, triangle, a Dorito, if you will. multiple Doritos, Doritos within Doritos. So I don't know. Do we get another thing here? Moving back up. I have a hard time thinking we're just going to have these little lumps. Maybe we run back up. See, here's the thing. Why would Ryan Cohen go ahead? Why would he go ahead and issue $32 warrants if he did not think there were an opportunity for the company's price to go above $32, at $32 or above in the next year? Happy little line. The Dorito of freedom. Shouting the cheese Dorito of freedom. The Stonk Boys forever. The Stonk Boys hurrah. Down with Kenny Mayo and up with Nat Turner. Well, something like that. I'll continue to riff. There we go. Can I copy this? I can't right now. Can I save it? I can put you in timeout. That's hilarious. I'm not going to do that. I'll add a favorite. There we go. Should be pinned to the chat now. Everybody can see it. I'll put it back up here. Somebody copy that because I can't copy it from here. I could type it in manually. docs.google.spreadsheet/d/1z capital SGEH XV capital C RKVH 63 M9 beep boop boop beep boop boop beep boop beep. Is that right? All right, let's try. Hopefully I didn't make a mistake. Nope, I made a mistake. No. Didn't I do that? Oh, wait. Why does it say I have to do docs.google. This? Try this. Sorry, unable to open the file at this time. Looks like this. Ooh, don't know about this. That's a good question, Kurt. Can Ryan Cohen lower the strike? Don't know. I do. I do from time to time. He's think he's doing okay. Our CEO sitting up saying gunslinging over warrants at high noon. That would be cool. Be cool if he gobble get any higher. Daily. Oh, V high. Yeah, 372. Look, that's cool. It like stands out here. It's so thick. Yeah, it's the thickest. You've never seen a lady gobble this thick. All right, let me try this. You tweeted at me. Are you in my message request? My message request box is empty. Here we go. There we go. There we go, Beckett Cat. I always knew you could do it. All right, let's take a look. Oh, you did add a lot more tabs. I think we can. You forgot to get rid of this though. Revenue down quarter over quarter. Revenue down year over year. That's well, quarter over quarter. I think is gone. Oh, this is aesthetically very pleasing. Then you got a fundamentals tab. Oh, this is cool as hell. Oh wow, much appreciate the aesthetic shift, guys. You see this? These are prime aesthetics from Beckett Cat. And there's that classic look. That Head and Shoulders classic clean. All right, let's take a look. Oh, interesting. Yeah, this does track a lot better. So, walk us through this. Can I wait? Can I put you on? I will. I will do this. Let me get the. Let me get the link here. Um, I may have to. May I may have to. I may have to end the stream and then edit the description on like the through the YouTube studio directly, but I will do that immediately. I'll do that immediately. So, Becky Cat, tell us, how did you modify the model tab here? What did you do to get this to track this much more closely? Because this particular sequence versus some of the other things I've seen, goes a lot closer. Maybe this is something. Maybe this is something we can do on a future episode, and we can voice chat this for a bit. So you've got the final, then you've got final, always repressed, final just up here. Let me see. Can I get this more in the screen? I guess that'll do. So Becky Cat says I separated out suppressed and unsuppressed to start with when we miss the red swap. JT, I'll post it in the description of the recording so you can take a look. Yeah, very interested to learn how you've worked on some of these models here. Looks like just up, I'm not sure. Let's get this time frame here. Yeah, so orange line does track this pretty closely. But then there's divergence over here versus price. Still gets the directional stuff pretty good. Then suppressed because, so you must be incorporating bond shorting here. And this implies bond shorting. And this implies, okay, maybe I understand. Green line's going to be what we get when we remove the insertion of the bond shorting. Something like that. And so if you have like, do you have like a hard transposition down or something? Okay. So adding GME FTDs to the model. Daily ETF sizes, FTD values. Interesting. Divergence typically occurs after red swap. Scroll down and you can see swap yes or no on Richard Newton's model. I forced it to always swap or always no swap and showed both lines. So let's scroll down a bit. Uh-huh. Let's see, where's the key? Swap model, I see. Average price, ETF 2x cash share swap model, max pain, combo tech, final, always repress final. Okay, this line is swap. Very cool. This looks very close. This is very cool here. especially how close this accounts for the bonds coming in. This is by and large what I've seen some of the other ones, but this is smoother. This is smoother. There's a little bit less chop, I think, here. And this does more or less look like what will happen, what we were talking about earlier this week, between going from, so to have like, that even lines up. Is that the 29th? Is that on cat day there? Yeah, we have a little spike up. That's after, I guess. What's that, 23rd? Interesting, little spike on the 23rd. Yeah. Yeah, but more or less flat, basically, kind of flat into the end of the month, maybe a little bit of action in there, and then we move basically after rate cut. Very interesting. ETF model indicates a decent change of a 24-27 swap date. Beckett Cat ETF model indicates a decent change. Right. That's the same thing. A decent chance of a 24-27 swap date. Interesting. Yeah, man. Let's definitely talk about this so I can see what's going on here with this closer portion here. But you use like some, I guess I don't know exactly what value Richard put in for the swap toggle. Wally says a lot of the ETF shares outstanding are delayed from most sources. I'm the guy that pays for the ETF fund flow data from NASDAQ. Oh, interesting. Becky Cat, let me know if you want updated numbers for the ETFs. Yeah. Cheers, man. I will. Yeah, I will send you a message on. I will send you a message on Discord, man. Very cool. Very cool. Great work. I'm excited to learn more about this. There you go, guys. I think that's a pretty good note to end the stream on for today. I will take this very excellent setup from Beckett Cat here. You guys can take a look, peruse on your own. Very generous to Beckett Cat. Let's make sure in the comments give Beckett Cat a nice round of applause for picking up the torch a bit here. Interesting to check out some of these insights. And yeah, I will put this in the description, like I said, after the stream closes, and then we'll see you guys. We'll see you guys next week. So thanks very much, everybody. It's going to be on the recording description. So it's going to be on the recording description. So as soon as I end the stream, I'm going to go in and edit the description, and I'll put the link there. Okay. So thanks a lot, everybody. Thank you, Beckett Cat. Thanks everybody for questions. Thanks for a wonderful week, and enjoy the weekend. See you guys on Monday. So take care, everybody.